When people talk about tax free retirement income, the conversation usually stops at Roth IRAs. But what if I told you there's a tax planning strategy to generate over $120,000 in tax free retirement income per year without touching a Roth? And no, this doesn't involve any type of cash value life insurance, and it's not illegal or even a gray area. It's simply a part of the tax code that many retirees don't know about, and it's known as tax gain harvesting. In this video, I'll show you how it works and how you can potentially generate a six-figure income in retirement without paying a dime in taxes. Hey everyone, my name is Jake Skellhorn. I'm a certified financial planner and the co-founder of Spark Wealth Advisors, where we help people build smarter and more tax-efficient retirement plans. If that sounds like something that interests you, consider subscribing to the channel here to stay up to date on any future videos. So the first thing to know with tax gain harvesting is that it involves utilizing a specific type of investment account known as a taxable brokerage account. A taxable brokerage account, also called an after-tax or a non-qualified account, is just a regular investment account. Unlike IRAs or 401ks, it doesn't come with any upfront tax deduction or special retirement label, but that doesn't mean it's not powerful. With a taxable account, you invest with after-tax dollars. Your dividends and interest are taxable in the year they occur, hence the name, but capital gains are only taxed when you sell investments. And here's the key: only the gain is taxable. Your original investment, or the cost basis, is simply a return of capital. Now, to really understand how this works, we first need to look at the two main types of tax schedules in the US. The first is ordinary income. That's your salary, business income, IRA withdrawals, Social Security in some cases, and so on. It's taxed at your marginal income tax rate, meaning the more you make, the higher rate you pay on each additional dollar. The second system is capital gains taxes. When you sell something like stocks, mutual funds, or real estate for more than you paid for it, you pay a capital gains tax. And there's two types of capital gains taxes: short term and long term. If you sell an investment less than a year after you bought it, the gain is taxed at your ordinary income rate. But if you hold it for more than a year, you qualify for the more favorable long term capital gains rates. And those are 0%, 15%, or 20%, depending on your total adjusted gross income. Here's a quick example. If your adjusted gross income is $100,000 as a single filer, your long-term capital gains rate is 15%. That's lower than your ordinary rate, and it's the government's way of incentivizing long-term investing. But what's even more interesting is the 0% tax bracket. Another quick example: if you're married and your adjusted gross income is below $96,700 in 2025, your long term capital gains fall into the 0% tax bracket. So, tax gain harvesting is intentionally selling your investments that have a long term gain in order to lock in that 0% tax rate, whether you actually need to withdraw that money or not. Now, here's where it gets even better. Because of the standard deduction, your actual gross income, or income before deductions, can be much higher. For a married couple, that means you can realize up to $128,200 in income and still pay no capital gains taxes. So let's walk through another more detailed example. Say we've got a retired couple with $1 million in IRAs and $400,000 in a taxable brokerage account. Half of that brokerage account, or $200,000, is their cost basis. Remember, this is non-taxable. And the other half would be considered long-term capital gains. Let's say they're not taking Social Security yet, they're not pulling from their IRAs yet, and they don't have any pension or rental income. In reality, most retirees will have some sort of income from the get-go, but for illustrative purposes, let's just assume they don't. So their ordinary income in this case is zero. Because only $200,000 of that brokerage balance is gain, that means for every dollar of investments they sell, only 50 cents is considered capital gains. So because of this, they could sell about $256,400 of investments, and only $126,700, or half of that, would be considered capital gains, and that keeps them within that 0% capital gains tax bracket. So they could walk away with over $256,000 of retirement income, federal tax free. If you're single, the numbers are smaller, basically cut in half, but the concept still holds. You could still pull over $100,000 tax free, depending on your mix of gains versus basis. And remember, these capital gains brackets are marginal as well, just like the income brackets. So going $1 over the 0% limit doesn't mean all of your gains are then taxed at 15%, only the dollars over that line are. Now here's the next layer with tax gain harvesting. If you don't need all that income this year, you can still take advantage of the 0% bracket by selling investments, realizing gains tax free, and then immediately repurchasing them. What this does is it resets your cost basis higher, so when you do need the money later, less of it is taxable, if at all. Think of it like giving your portfolio a fresh start at a higher baseline. So don't overlook these accounts just because they don't have retirement in the name. Tax gain harvesting and taxable brokerage accounts can offer a ton of flexibility for retirees, especially when your income is low, like it usually is right after you retire, but before you claim Social Security or pensions, etc. If you want to download my free financial planning cheat sheet that I referenced throughout this video, you can find it in the description below. It has a ton of the latest info on tax brackets, when Social Security becomes taxable, contribution limits for retirement accounts, tons of good information for tax planning and personal finance. And if you're looking for help building a plan that takes advantage of these tax rules, my firm Spark Wealth Advisors is accepting new clients at the time that I'm filming this video, and we would be happy to speak with you. You can schedule a free intro call using the other link in the description below. And if you want to see how we use these taxable brokerage accounts in a real retirement plan, you can watch this video next. Besides that, drop a comment below with any questions, and we will see you in the next video. Thanks for joining.